Good morning, everyone. Good morning. Welcome to Trading with Sergio. President's Day edition. Markets are closed. It is, I thought, well, first of all, I'm in California and it's gloomy, heavy, rainy day. So I'm like, okay, what can we do? I'm sitting at home, not much to do. Did all the other stuff I'm supposed to do. So I thought, okay, I'll post it on X as well. I'm not sure if this is broadcasting on X. There's some sort of glitch going on, and there was a glitch going on for the delay, so apologies for the delay. It is Monday. Markets are closed. I thought I would go through my thoughts about the markets, what's going on. Yeah, there is some sort of glitch going on. I'm not sure with broadcasting live on X through StreamYard. But I thought, okay, we'll do a little town hall kind of a thing. And I invited all the X gurus. So if anybody on X is watching this, you're more than welcome to do so. Although the delay probably caused some people to forget about it. Here's the link of the live stream. If anybody wants to come on, you guys are more than welcome to do so. And I'm pretty sure this is not going on X from the size of the crowd that I'm seeing. I don't know what's going on with X. I have attached my X account to go live. It was doing it up until about a week ago, and now there is a problem with it. Maybe I have to delete it and restart over again. But regardless, I'm going to, if anybody wants to join, please, grab the link. And I'll see you in the green room. I'll put you on. All I'm asking is that you're in a quiet place with good internet reception. So let's do the state of the markets. Let's go through each market. And then I'll also go through some individual stocks that is very fashionable on X these days, with a lot of bag holders, especially in Hood and Palantir. There's also a little soap opera going on with Palantir between Michael Berry of the GFC housing crash fame and Amit Investing. And they were going back and forth at it. I think Amit's a decent guy. I'm pretty sure. I don't know him personally, but they're going back and at it. I mean, Amit's a bull, and Michael Berry's a bear. He has puts on Palantir. Palantir has been on a pretty decent drawdown, but I'll go through individual names as well to see my opinion. I mean, to just put out my opinion. I don't know. Everybody's opinion is as good as their opinion, pretty much, really. I've said this before. I don't think anybody knows what's going to happen to markets the next day. And, there's a lot of fluff out there. Look, there's thousands of stocks people can invest in, but for some reason, and actually I muted everyone on X that's putting out financial stuff, because it just doesn't make sense. The algorithm keeps feeding it to me for one reason or another. The algo keeps just X algo. Hey, Elon, fix the algo. It's feeding me these ridiculous tweets. Such as, oh, look at my realized gains. I sell puts, I sell calls. I'm like, bro, what are you talking about, right? So the goal is here to inform and educate properly. There's a lot of people just, talking their book, and then they're just burning, a hole in their pockets. Pretty obvious. And but they keep saying the same thing, right? It's like a broken clock is going to be right twice a day. I don't know. But there have been, Palantir has made a lot of money to a lot of people over the last 3 years. And now there's questions about AI's viability. Is AI going to survive? The same stocks go just around the clock on X. People just kind of go, yeah, well, Hood is this, and Palantir is that, and SoFi is this, and, HIMS is that. And I'm like, there are 5,000 other stocks that people can trade, and these are legitimate. They're not meme stocks. These are legitimate companies with earnings and at some point, emperor has no clothes is going to come into play, because where's Palantir's? Fundamentally, is it expensive? Is it cheap? Are earnings going to catch up? Well, over the last month at least, what's going on is that a lot of these high PE stocks, growth stocks nonetheless, but high PE, super high PE stocks, and in the hundreds. In fact, in Palantir's case, it's sales, really. I mean, they don't even have earnings, to be honest with you. So there's this discussion going on, right? Are these stocks are going to keep selling off? But then I thought I'll start with the general market conditions, go through stock indexes, bonds, precious metals, and crypto, right? And those are the 4 areas that people are focusing on, especially in social media. So what I'm going to do is, go through some charts, give my opinion. Again, charts are just charts. Charts look backwards. They don't tell you what's going to happen in the future, obviously. But then fundamentals of every company at some point is going to take over, right? If you're dealing with a growth stock, it will have growing pains, right? If the company has 0 earnings, which in many cases, all these AI power generators and Palantir or whatever, they don't have any earnings, right? So what they have is a promise of growth and earnings to catch up. Well, Wall Street decided about a month ago, it's been going on for over 6 months now with a lot of software stocks, legacy software stocks, like Adobe's major names, right? Salesforce.com, ServiceNow, they just got cut more than in half, 60, 70% lower. So maybe AI is going to hurt these companies, but Michael Berry is questioning AI's legitimacy and Palantir's legitimacy. And they're going at it on Twitter. I mean, it's like a soap opera. I tweeted it yesterday as well. But one thing that people are not paying attention to is, at some point, about a month ago, Wall Street decided, okay, we're just going to cut all these stocks in half, especially these high growth PE stocks that we don't think they deserve this kind of multiple. Well, Wall Street has decided that these stocks, Hoods and SoFis and Palantirs and even Oracles, they don't deserve these high PEs. Okay. When they do that, the sell-off is brutal. It's 50, 60, 70%. And that's just what the index is down 2%, literally 2% from their all-time highs. So when this happens and you're only dealing with these few names and your stock portfolio is full of these names, you're going to get nailed to the wall. I mean, there's no ifs and buts, especially, again, as a trader. I'm not talking as an investor. Look, at an investor, you can hold a stock forever. It may turn out well for you. It may turn out that it take you to the, broke house. So I don't know. But very few stocks are to be bought and held forever, right? And a lot of people are of the opinion that, even if they are, unrealized gains are just unrealized. I haven't sold anything. They go, they quote Warren Buffett saying that unrealized gains are just unrealized. I haven't sold anything. Yeah, but you just can keep a stock for another 10 years. If it's in its own bear market, it's not going to come back and save you. There's many, many examples of that, right? Before UPS bottomed, it was in its own bear market for 3-4 years. Tesla is the same exact price as it was 4 years ago. And Oracle is cut in half, and a lot of these stocks, by the way, are getting very close to the April lows. So, when Wall Street decides that multiples need to shrink on these stocks, that's what they do. They get sold. And no amount of retail power is going to be able to stop that, right? I mean, there is definitely power in retail, but, retail seems to be holding the bag on all these stocks and complaining about it. I'm like, you have to understand risk. There is risk in everything. And but my goal is to just read through the tea leaves properly, and when a stock gets cut in half, there is a reason for it, with no bad news. Because before then, in the case of Palantir, let's say, that stock went from 10 to 190 in a matter of a couple of years. Why? Okay, well, there was the momentum. Obviously, retail is completely behind that stock, and then now it's down 60 points from its high. Still up, great, handsomely over the last 2-3 years, but go tell that to someone who believed in it in 150 because it pulled back from 190, right? So now they're in a world of hurt. And, sometimes stocks don't come back to save you, right? You need to be really cautious about these things. And, but, the argument is that, okay, when Wall Street decides to shrink PEs on these or, revalue these companies, it's brutal, right? And if you get caught with one, don't be a fool. Take the L and move on. So good morning, everyone. Okay, good morning. Let's see, Traveler, good morning. Okay. Friend Zone Millionaire. Okay, as long as Luddites continue to try to invest in technology, they'll keep getting it wrong. I'm not sure it has anything to do with Luddites. I mean, I don't know if you know the story of the Luddites, but I don't see the correlation there. Maybe you can explain yourself. If you like, you can grab the link and come on. We can talk about it. I do know the history of Luddites. I don't think they have anything to do with technology. Technology investment has been great over the last decades, 2 decades specifically. So I'm not sure what Luddites have to do with technology, but maybe I'm getting it wrong, or maybe I'm not getting the context of your comment. I think Amit's pretty much hitched his wagon to Alex Karp and Palantir. Okay, Amit is sharp, spends 24 hours a day on X. Yeah, well, that doesn't make him sharp, Doug. That makes him accumulate followers. Yeah, I agree with you 100%. It's the same thing with him and Hood. So, look, I don't know. Amit, I hope he grabs the link and comes on, but I don't think this is broadcasting on X. There is a glitch somewhere. I don't know what's going on. It was doing it on X, but now it's not for some reason. I don't know. I think it's just on YouTube. In fact, if some of you can go on X and check out my account, if this is broadcasting live on X, I would appreciate it and come back and let me know, because I don't want to look at my X account at the moment. But from the live viewer crowd that I'm seeing, I don't think it's broadcasting on X. But actually, maybe it is. I don't know. Anyway, so let's do it. Let's go through the indexes first. Then we'll look at bonds, interest rates specifically, and then we'll look at gold and silver, maybe copper, but mostly precious metals. And then we'll go through crypto. We'll just I have some time today. So again, if any of you want to come on, please grab the link and come on. And here's the link. Here is the link of the live stream. Here it is. Okay. Okay, Doug says, I didn't say measure because... yeah, no, I mean, I don't know the guy. So all I know is he has a big following. He started investing during the pandemic, and, I agree. He has interviewed, Karp of Palantir and Vlad of Hood, and he's Tom Lee. I mean, look, he's building himself a. I mean, he's intelligent guy. I'm pretty sure. I mean, he I don't know. He makes himself look out to be. I don't know his educational background. I don't know his experience in markets. Look, everybody's genius when the markets are going up. And bull markets create geniuses. But yeah, I don't know much about him other than seeing his post on X. And but he certainly has created a pretty decent following. But that, I think, all started with the pandemic. And since the pandemic, investing has been easy, right? There has been a brutal sell-off in 21 and 22 when Fed was hiking interest rates. But all they did is they wrote it up and they wrote it down and they wrote it back up. And then, that's not investing for me, or that's definitely not trading for me. I don't know. But I could, I could be wrong. I doubt it, but that's not how you do it. And riding a stock from 10 to 190, or let's say in Hood's case, riding a stock from 10 to 155 back to 70, I'm not sure what the purpose of that is. And nobody knows where these things are going to bottom out. Again, everybody says, "Oh, Hood is cheap." I'm like, no, it's not cheap, but it's cheaper than before. So we'll go through Hood, we'll go through Palantir, we'll go through, I'll put my opinion out, which is as valid as any other guys on X or anywhere else. Yeah, absolutely. Look, man, we all do different things for different reasons, and we all have different needs, financial needs, whatever it is. And markets have been great. Markets have been great since 2000, when everybody started investing, and Robinhood democratized investing and trading, and then amazing, right? The more people, the more the merrier for me. And in fact, I commend Robinhood for what they have done, because I truly believe financial independence or financial freedom comes through financial literacy. And I hope there was more content about financial literacy as opposed to picking a stock and riding it from 10 to 155 back to 70. So because that's not financial literacy. But again, everybody has an opinion, and all opinions are valid as far as I'm concerned, because people are not just going to they attach themselves to a cult or to a group. I don't want to call it a cult, because the cult is different. They attach themselves to a group, and then look, who doesn't like to hear positive things about what they hold as far as stocks are concerned, or whatever it is, crypto, or or gold, or whatever. Like Peter Schiff constantly talks shit about crypto and then loves gold. Okay, Michael Saylor and Tom Lee are in the other camp, and Michael Berry, who his fame has been, he's been actually late to that party too, because he almost went broke before he turned the mortgage debacle in 2008 into billions. He was wrong for a year and a half. You guys have to understand the history of Michael Berry. And then a few months ago, he comes out and he buys some way out of the money puts on Palantir. I'm not even sure if he's short the stock as far as absolutely, the shares itself. He went and bought some year and a half out $50 puts. I'm sure they have appreciated a little bit, but he's been wrong a lot as well. So he's been saying gloom and doom for the last 3 years on the markets. The markets are 2% an all-time high, close to 7,000 on SPX. So look, man, I don't think anybody knows. Excuse me. I don't think anybody knows what's going to happen. But then trend is your friend. There's definitely dislocation between the indexes and a lot of the high flyers last few months, and that's very noticeable to me. And if you're into those high flyers, you're getting smacked, right? And now, if your goal is, if you think you're going to hold Robinhood for the next 10 years and Palantir for the next 10 years, and you're making some projections of what could happen to these stocks over the next 10 years, they may not even exist, because something may come around and replace Palantir altogether or Robinhood altogether. What's the AI role going to be in finance? Look what happened to Schwab last week, right? So all I know is that when people make these long-term projections, including fools that I call analysts, like, nobody knows, man. What I know is the price of the stock in front of me. That's today's price. Is it mispriced? You have an opinion, you may think it's mispriced. Well, the other thing that most people don't understand is that when you're buying a stock, okay, let's say you're buying Palantir at 130, the person who's selling it to you has a diametrically opposite opinion of you. Otherwise, why would they sell it, right? They think it's going lower, you think it's going higher. That's what makes a market. So Amit thinks Palantir is going higher, and Michael Berry thinks Palantir is going to zero. Okay, well, that's why we have a market. Both cannot be right. One of them is going to be right. Now you could say both could be right, because Palantir could go down to 50 from 190 and then go back to 300. I'm like, but that's not being right. That's you just sitting on something and hoping and praying that one day your assessment of the current situation is going to turn out okay. I don't think it works like that. I really don't. But look, to me, again, I agree with Doug here. To each their own. What they do is what they do. but you know, face the consequences of what you're doing. So let's go through. I'll answer the questions later, but let's go through let's take a look. Let's take a look at where we are, because I put it on the title of the live stream today, State of the Union or State of the Markets. Indexes, we'll go through the indexes first, and then we'll go through you know, interest rates, and then precious metals, and then crypto. I don't know, crypto was rallying over the weekend. Let me take a look. I think it's selling off now. You know, they do that all the time. And let's take a look where crypto is. Actually, we'll go there when we're doing it. Okay. So let's take a look at what's going on. In fact, I'm going to put myself in the little window down here. So, hope you guys can see this. Okay. All right, let's go through indexes. All right, this is SPX or SPY. SPY has been grinding higher since April, right? We had the bottom in April. We'll just keep grinding. We had like some little 4 or 5% sell-offs in between. This is the April low, okay? This is 1 year, 1 day. I like my charts clean, so not too many lines drawn. A lot of people are saying this is going to roll over. Well, one thing that I've been saying for the last few months now is that indexes are not going to go anywhere, especially SPY or SPX, S&P 500, because it's a market cap weighted index, and Mag 10 rules. Mag 10 is a massive, massive part of S&P 500. I'm not sure what the latest percentages with the sell-offs that we had, especially in Microsoft and some other Mag 7 names, but still, I'm pretty sure it's over 60% of the S&P 500. So indexes are not going to go anywhere this year unless the Mag 7 goes somewhere. Now, if you look at an equal weighted S&P 500 chart, it looks completely different than this, okay? And but small caps, mid caps have been outperforming over the last 2 months after underperforming for close to 4 years, 5 years, which is, let's say, an index like Russell 2000. So this is the S&P 500. Well, to me, I mean, is it a rollover? I don't know. But we could just keep bouncing off of a same low, and we just kind of bounce off of 7,000 on SPX or 700 on SPY, and we're just kind of stuck in this range. When this range is taken out, this is technical jargon, folks. When this range is taken out, you should expect a big move, right? When I say big move, to the tune of probably 10%. And this is triple Q, which is the NASDAQ 100. It looks kind of the same, although it's a little further from an all-time high, but basically we've been just grinding sideways on triple Q, and we've been just grinding slowly higher on SPY. Should that be considered a loss of momentum? Yes and no, but again, SPY is not going to go anywhere unless the Mag 7 or Mag 10 moves higher, appreciably higher. Well, where are those at? Well, those are at, let's start with the Mag 7. Here's Apple, you know, retested the high, now it's selling off. But again, Apple has been the same price as it was last September. Here's Amazon. Amazon actually is looking kind of negative under its 200 EMA, but if you look at Amazon, Amazon is actually selling at the exact same price as it was selling last May. So that's why SPY is not going to go anywhere, due to the fact that these mega trillion companies are massive parts of the index because they're market cap weighted, right? Here is NVIDIA. Look at NVIDIA. NVIDIA has the exact same price as it was last July, right? I mean, I don't know if Tesla is still considered in there, but Tesla is the same price as it was last September. And here's Microsoft. Microsoft actually has been selling off quite hard, 550 down to 400. And Microsoft is basically approaching the April lows. during the liberation tariff musical chairs crisis, and Microsoft is selling where it was selling literally like in May of last year, right? And then Meta is selling at the exact same price as it was selling again last May. So to me, if these stocks don't move appreciably higher, index as an SPY or SPX is not going to go anywhere. And same thing with the triple Qs. Triple Q actually is underperforming a little bit because, again, vast majority of the 100 stocks is these Mag 7, Mag 10 stocks. And then I don't know if still Netflix is in there, but look at Netflix. Netflix is actually selling where it was selling 2 years ago. So my point in all this is this is not a stock market. It's a market of stocks. A lot of you, I'm pretty sure, invest in indexes, dollar cost average, things like that, which is great, fine. But if you're stuck in a Netflix from 134 to 75, if you're stuck in a Tesla, or if you're stuck in, because Tesla's selling where it was selling 3 years ago, 4 years ago, it's the same price. So you're just basically round tripping, right? So indexes are not going to go anywhere unless these Mag 7, Mag 10 stocks make a major move. And if you if you are caught in in a Netflix, let's say, which is cut in half almost, without the market selling off, my question to all of you is, where is Apple, Amazon, Meta, Microsoft, Google actually is the best looking one out of the Mag 7, although kind of rolled over now, but you guys can see the difference, right? Google actually has been the best performing Mag 7 stock or Mag 10 stock, going back since the lows in April. And full transparency, I'm long Google in my long-term port at 152. But again and again, so it's a market of stocks. It's not a stock market. I think going forward, next couple of years, indexes are not going to go too much. And I think it's going to be a stock picker's market. Because there's many, many, many wonderful companies who are outperforming all the Mag 7 for a while now. And, you just need to find it. You just need to find those needles in a haystack, and they do exist. And so for me, indexes are going to underperform going forward, the major indexes, S&P 500 and triple Qs. And even if they may even sell off, actually, to be perfectly honest, the way it looks is, the question is, what will happen to a Microsoft if the indexes start selling off, if S&P 500 starts selling off? Is it going to rally? Is it going to do a counter trend move? What's going to happen to Amazon, right? Again, these companies are not going anywhere. These are major, massive companies that are worth investing over probably long periods of time, but this underperformance has to be noted. And you have to understand something when you're investing. There's opportunity cost, right? A lot of people are just ride these things up and down, up and down. Yes, over long periods of time, stocks do go up. I agree. But maybe there's also has been time in history that stocks went sideways for 10 years, 12 years. There are at least 2-3 occasions that I remember, and then go check your history. It is a fact. And if we're in those periods, then you have to be more actively investing and doing a little bit more research and finding some of these gems that exist. And when you say gems, right, you have to follow rotation. I mean, a lot of people are just blinded by, okay, Mag 7, Mag 7. Well, now Mag 7 outperformed for 3-4 years. Now maybe it's not time to do that. And then while you're waiting for these Mag 7s to do their thing again, you're missing a lot. You're missing, it's called opportunity cost. And I don't think anybody talks about it or pays attention to opportunity cost. I mean, for example, if you're Walmart is not a small company. I mean, look at Walmart. Look at the difference between Microsoft and look at Walmart, right? Yes, they're different businesses, but why not be in Walmart in this phase as opposed to being Microsoft, right? I mean, yes, Microsoft may do well going forward, but it's already a $3 trillion company, market cap company. how much growth is left in there, or an Apple, or Nvidia, let's say, right? So if you look at Walmart, you wouldn't know that the market's grinding sideways. Well, why not be in a Walmart as opposed to waiting for the Max 7 to outperform again, tech to come back again? So my question in all of this is for the indexes. My conclusion is for the next couple of years, I think we're just going to kind of go sideways. We may get a sell-off if the economy slows down, but I don't know. But the sideways grinding higher in a tight range, kind of up 5%, down 5%, is pretty normal. But then what I read on X is a lot of people are just complaining about, my account's down 50%. Yeah, because you're holding, let's say, a stock like Oracle, right? Oracle is not a small company. Not long ago, about 3 months ago, 4 months ago, Oracle was $345 a share. Today we're at $160. That's more than half, cut in half. This is not a small company, folks. So my thing is, again, over long periods of time, stocks do go up. But then what individual stock you're in is going to decide how your portfolio does going forward, as opposed to if you just invested in an index over the last 5 years, you did amazing, right? Well, is it normal that an index, if you dollar cost average into an index and it went up on average 20% last 5 years in a row, is that normal? No, absolutely not, because the current history suggests that it's about 10, 11%, including invested dividends. Well, look what's happening now, right? So what if the indexes are sideways for the next 2, 3, 4 years? You can still dollar cost average, you can still be invest your dividends, but expect over long periods of time, and I'm talking longer, much longer periods of time than 3 to 5 years, indexes return 10%, 11% on average, and that's the S&P 500, and that's the benchmark everybody competes with. Very few can beat it, and that's if you're not an active investor, that's the best thing to do, especially if time is on your side. So that's what I see on the indexes. So let me go to the front and let's see if there's any questions to be answered. No questions. Okay, now we'll go to, it's a holiday, but it's kind of, I don't know, it's kind of quasi-holiday, not that important really. So let's go back to the charts. Let's go to interest rates. Let's talk a little bit about interest rates. All right, so where do I follow the interest rates? First of all, as we know, the Trump administration would like to lower interest rates, right? They would like lower interest rates for many, many reasons. First of all, it's good for the consumer because we're a consumer spender economy. It's good that auto loans go down, mortgages go down, restart housing again, which has been in a slump for the last 3 years or so because interest rates are so high, prices are so high, affordability index is in the toilet. Credit card rates, interest rates are extremely high, so why not, right? Lower interest rates are good for the consumer as long as they're passed through by the banks. But this is the chart of TLT. TLT is iShares 20-year plus year Treasury bond ETF. Okay, this is a 20-year bond ETF basically, but it's inverse for some reason. So when TLT is going up, that means actual interest rates are going down. When TLT is going down, actual interest rates are going up. When was the first cut of the Federal Reserve as far as interest rates are concerned? Anybody remember? Anybody? It was last September, folks. It was right here. Right here, September of 2025. Okay, so TLT was 91 at that time. Where's TLT today? Even with the last rally that we had from 86 to 90 almost, which rates have gone lower. This is 20-year, again, this is long-term interest rates. It's not even back to where September was, but since September, the Fed has cut the rates by 150 basis points. So what you must understand here is that Fed cutting the rates means nothing. It literally means nothing because Fed cannot move the long end of the curve. Now, they can do a lot with the short end of the curve, right? The Fed funds rate is being lowered. That's why, by the way, your APY on your Robinhood account sitting in cash, if you have Robinhood Gold, has gone from 4.5 to 3.25%. So what's going to happen now is that Fed and the administration will like lower interest rates. Well, there is reasons the bond market is not listening to that up until the last few days, by the way. The reason for that is our debt, our national debt is about to hit 39 trillion, and it's estimated that in, next by 2030, we're going to hit, there was some number like 50 some trillion dollars, which is absolutely ridiculous, but we'll get there because we have no austerity, we have a broken fiscal policy, and then we have a broken monetary policy that follows broken fiscal policy. So Fed can do whatever the heck they want. Fed long bond market doesn't listen to the Fed. With all the power the Fed has, yes, granted, many people say don't fight the Fed. I agree. But the Fed cannot do anything about the long-term interest rates. They can manipulate short-term interest rates. That's a fact, and which they're trying to do. But in order for the long-term interest rates to go down, the country needs austerity. The country needs to understand that we cannot just print and spend. And consequently, here we are. We're about to hit $39 trillion in the next 3 weeks. Well, national debt is there because we like spending money that we don't have. So our total receipts, income into the treasury per year, including obviously taxes, corporate taxes, and all that stuff, individual personal income taxes and everything else, is about 5 trillion. Well, our budget is 7.5 trillion. Well, there's 2.5 trillion deficit there. So where's that money going to come from? Well, we don't have it. So what do? We print it and we spend it. Well, consequently, what happens when there is more of something? The price of that something goes down. Well, here's the dollar index. Here's the dollar. Here's the U.S. dollar over the last year. In fact, if we look at the U.S. dollar, it's losing its value, right? If you look at over the last 3 years, look where the dollar is doing. So when there's more of something, because we keep printing U.S. dollars, well, we actually don't print. Well, we just add it to our ledger and then, put it out into the system. That's trillions of dollars going into the system. That's the argument for gold bugs and, Bitcoiners and Ethereum holders, is because, right, debasing of the currency, devaluing of the U.S. dollar, you as a consumer is losing buying power by 6-7% a year. The government says inflation is under control. That's completely bullshit. Nothing is under control because of the national debt. The national debt is going to keep growing and keep growing and keep growing, regardless of who is in charge, until that's fixed. Now, this administration's point is, well, we don't need to fix the national debt. Actually, national debt, they're saying, at 125% of GDP is not that much. Okay, well, if our GDP is about 30 trillion, our debt at the moment is just about to hit 39 trillion, right? Now, what will happen to that debt to GDP if the economy slows down? Since we're 75% consumer spender economy, what if the consumer slows down? What if we get in a recession? Do you think we're going to produce 30 trillion in GDP? No. What if AI is a bust? Because most of the GDP growth this year is coming from AI spend, right? And last year. What happens then, right? I mean, again, I'm not a gloom and doomer, but you have to think about these things, right? We have 39 trillion in debt to be 40 in 100 days and 41 in another 100 days. So the debt's going up, national debt's going up, $1 trillion every 100 days. Well, that's, Elon Musk talked about this. He tried Doge and didn't work out. And he goes like, hell with this. Because Washington likes spending money that they don't have. Whose money is that? It's your money, folks. It's your tax dollars at work. They squander it. And then they have to go borrow another $2-3 trillion a year in order to close that deficit. Well, okay. Well, if we keep doing that, then yeah, that's why gold is where it's at. That's why, people are expecting Bitcoin to be 1 million. I'm not sure about that. We'll talk about that. That's why the US dollar is losing value, and that's why you're losing buying power. And that's why, all asset classes are very close to all-time highs. And as long as that continues, I believe asset classes are going to keep going higher, because there's so much more money in circulation that money is going to chase return. And when that chases return, that's what's going to happen. I mean, I don't see it any other way. And so this administration's point in all of this is, well, we'll grow out of it. Okay. how do we grow out of it? Okay, so in order to lower the debt to GDP, we have to grow the economy faster. Maybe they will. Maybe all the plans they have in place is going to do that. Maybe we are going to accelerate GDP growth to maybe 4%, 5%, 6% annually. In order for that, I mean, I have to see it to believe it, but I haven't seen it yet. But although GDP growth is accelerating, what's going to happen is that the debt and deficits are accelerating as well. So that better happen quickly, because the debt's not waiting. And the biggest part of the national debt that is a concern to me is the servicing of this debt, right? Because these are all IOUs we have spread all over the world, and including U.S. pension plans and sovereign wealth funds and things like that. Okay, well, if we put our future into some foreign land's hand, some foreign entity's hand, because they bought our bonds, because we like spending money we don't have, well, we have to pay them interest. And that interest cost is almost double our military budget, right? It's about 1.3 trillion last year, and it's going to be about 1.6 trillion because the national debt keeps growing and we keep issuing these bills, notes, bonds, and then we have to sell them. Well, the buyers of these at some point may require or may insist for a higher return, and that's why the Fed cannot control the interest rates, right? The bond market's way too big for interest rates for the Fed to control. And this is the TLT going back 3 years. Whereas interest rates are high compared to 3 years ago, because TLT was 109. Now we're at 90. That means interest rates are higher. Again, this is an inverse index, by the way. And if we look at 10 years, this is the pandemic, right? In 2020, where interest rates were lower to zero. And then look where we are. Interest rates have been going higher ever since 2020. So TLT going lower means real interest rates are going higher, right? And if we look at an all-time, what's happening to interest rates? Well, we are back to 2002 levels of interest rates, right? Here we go. Sometimes it's good to pull back and look at, have a historical perspective of where interest rates have been. But since 2008 GFC, which is this point right here, we've been basically living in a very low interest rate environment that's been induced by printing and spending, right? Print and spend, and it hit its pinnacle, it hit its peak in year 2000 with the pandemic, where Fed had to come in and save the economy pretty much. And since then, interest rates have been going higher and higher and higher. Now, historically, 5%, by the way, is not that high. If you go back to 1979, 80, during Volcker times, we had 20% interest rates. I mean, that was because inflation was completely out of control. But now, people call 5% high. Well, not really. If you lived through 1979, I was a young person then, but I do study history. And so interest rates to me are definitely should go lower, but in order for them to go lower, we need to have fiscal discipline, and we need to have monetary discipline. And I think both have left the building. I don't think we're going to get that. Definitely not fiscal discipline. And monetary policy follows fiscal policy. And our fiscal policy is what? Print and spend, because we're running a $39 trillion national debt. So that's interest rates, folks. And then let me go to the front real quick. No questions. Again, if anybody wants to show up, please grab the link and come to the green room. I'll put you on. Here's the copy of the link for StreamYard. And here it is. You're welcome, Doug. I mean, I got nothing else to do, honestly. I thought we'd do like a state of the markets kind of a thing. So we went through interest rates. We went through the indexes, what my opinion is going forward, next couple of years anyway. And now let's go through precious metals, right? What has been going on in gold and silver? Oh my God, right? What a rally. And we just talked about interest rates, and we talked about print and spend, and we talked about debasing of the US dollar. We talked about the US dollar losing value. This is all part of it, man. It's been coming, and gold has outperformed pretty much everything last couple of years, right? By quite a wide margin, including Bitcoin. And it's an interesting thing. Like, is 5,000 gold too high? A lot of people are talking 10,000 gold. I mean, look, if we keep printing and spending, let's say call gold an inflation hedge. Yeah, I mean, you have to protect yourself, by the way, folks, somehow. Don't listen to the government. Government's gaslighting you. Government saying, oh, inflation is 2.5%. My ass is 2.5%. It's not 2.5%. You're losing buying power of to the tune of 6 or 7% per year. So you have to make up for that. So if you're investing just in index, 10, 11%, okay, you're making headway against that. But if you were investing in gold, if you invested in Bitcoin, a while ago, not last couple of years, obviously, but we're talking about precious metals. If you invest in gold and silver over the last through 2-3 years, you've done amazing, right? You not only kept pace, you went way ahead. But that's why you have to, instead of slave harder for a W-2 or a paycheck, you have to save in our hard asset. That's why I believe investing and long-term investing is a key to financial freedom, because look, nobody's coming to save you. Nobody's going to save you unless you have rich parents you can count on, that you have a trust account or some sort. Nobody's coming to save you. So learn this, understand this, and make sure you just listen to the people who you trust, as opposed to some fool on X. I keep calling them fool on X because they're all fools. And, because they talk their book. And, I mean, to me, it's like, understand risk, but then also you have to protect yourself against inflation. The inflation is not 2.5%. We all know it's not. We all go buy stuff. Okay, we know what's going on. We know what's going on to auto insurance rates. We know what's going on to utility, power and water bills. We know what's going on, right? In all this, schooling, we know what's going on, healthcare. Government kind of says it's 2.5% because their basket is made up of some ridiculous stuff that just only collects that data. I'm like, I'm paying a lot more than 2.5% for everything that I'm buying over the last, I don't know, 5 years, 6 years, 7 years. Right. So, and it's going to keep doing this. I mean, because on the other hand, the inflation, they're saying low, but then they keep printing and spending. Well, that's the reason for inflation, because the true definition of inflation is too many dollars chasing too few goods. Well, we have too many dollars because we keep creating synthetic dollars out of thin air by adding zeros into the ledger and then just putting it into the system. Look at the M2 growth. Global M2 growth, that's money supply. Look at the US M2 growth. It's been going from lower left to the upper right nonstop since 2008, actually. Well, that means you're losing value. You're losing your buying power constantly. So when you're losing buying power, what do you have to do? You have to protect yourself, because I don't think your paycheck is going up 6-7% a year. I don't believe people's paychecks have gone up 6-7% a year the last 5, 6, 7 years. Well, now you have to go invest, right? If you don't invest, you're going to be left behind. And that's the reason, by the way, the top 10% own 87% of the assets in this country, because they invest correctly. They have seen this, they understood what's going on, and they protect themselves, right? How do you do that? Precious metals, stocks, real estate. That's the only way. You have to protect yourself. And we know what's going on with all those markets. So let's talk a little bit about gold. Let's talk a little bit about silver. And I mean, they have had a parabolic move, right? Most parabolic moves end badly, which it did, by the way. So let me answer these couple of quick questions and then we'll go on. Oh, you're welcome. Yeah, please join if you care to join. We can have a discussion about anything you want to have. Is gold and silver overvalued still, even though the dollar is losing? Yeah, no, it's not. I don't think it is. I don't think it is. Because I don't think it is. Look, I mean, look, the price is the price. You can't argue with the price of these things, right? Silver hitting 120, gold hitting 5,500, and yeah, a little bit of a pullback, but gold's still at 4,800 or 5,000, right? I mean, those pullbacks happen when things go parabolic, and then they settle down, they go sideways for a few months, and then they take the next leg up. And I don't think it is, because gold and silver will sell off if we have proper fiscal policy, meaning we don't keep printing anymore. When M2 starts coming down, when money supply comes down. I don't see that happening with any administration. I don't see that happening with whoever is in the White House. I don't see that happening with any, anybody, whoever is in Washington loves spending money they don't have. So that's going to continue. I don't think it's over. I really don't think it's over. I mean, you have to have a longer perspective. Traders look at gold selling off from 5,500 to 4,500 overnight. Literally, that's what happened. And people go, "Oh, it's over." I'm like, "What are you guys talking about?" Right? I mean, you have to understand the bigger picture behind why these things are happening. So let's take a look. Let's take a look at no, this one. Let's take a look at gold and silver. Hopefully, you guys can see this. Actually, let's just leave the monthly on. All-time gold. This is all-time gold. Does that look like anything has changed? Yeah, it had sell-offs, obviously, because when rates went higher or whatever happened. But then the general, actually, if you look at this chart, this is gold going back to 2004, about 21 years. This is all my charts show going back, but obviously gold has a much longer history. This is a copy of the money supply chart, literally. Okay, all of you can Google that. Just go to look at M2 growth, global M2 and US M2, and this looks pretty identical to this chart. And if you look at silver, same thing. There you go. Although silver has gone absolutely parabolic at some point, and over long periods of time, this is your protection. This is your inflation hedge, right? I mean, I'm not saying you should go put all your eggs in one basket. You should definitely have some exposure to gold and silver. You have to, because that's how you're going to just kind of combat inflation that the government says doesn't exist. So this is gold and silver. So that's going back to 2004, 2005. If you look at shorter term stuff, because I look at 1 year, 1 day, yeah, it got a little out of hand when SLV, which is iShares Silver Trust ETF, went to 109. So 109, I think, equals about 120 in physical silver. And then it literally collapsed to 70, and now it's just kind of going sideways. We'll see where it's going to end up. But I think my point in all this is, over periods of time, it's higher, and it's going to be that way because we're not changing anything. And gold and silver, I don't think, are high. And then, within that, you don't have to invest in physical gold and silver. Obviously, you can do it through GLD and SLV, which is the ETFs of gold and silver, which is one way. But we can also look into investing into obviously silver stocks or gold stocks, and the index for that is NUGT. That's the daily gold miners 2x ETF. Actually, look what that has done. Right, that has gone from the lower left to the upper right. While all this is happening, a lot of people are talking about Palantir and Hood. I'm like, this is the opportunity cost that I'm talking about. Right? So to me, it's like, no, you need to just change your tune a little bit, right? There's many other ways to invest and benefit from what's going on, as opposed to just, have a horse with blinders on and just see Palantir or Hood or SoFi or whatever, or Mag 7, right? Why do I need to be in Mag 7 when gold is doing this? So my point in all of this is there is a time and space for everything, and then hopefully you guys will understand how these things are correlated, right? What happens to interest rates, what happens to the US dollar, what happens to precious metals. Why do they do what they do? Yes, the sell-offs do come and then wipe people out, and because they're just overly exuberant on the upside. Okay, so gold is going to go sideways. Gold had a correction about last September, October. Yeah, it had a pretty big correction, actually. It had, this is the GLD, not the gold price, but you can correlate to the gold price, spot gold price. It went from 190. This is NUGT, by the way. It went from 190 to 120. That's 70 points. That's like a pretty big sell-off, 40%. Well, it's doing the same thing now. It went from 317 down to about 200. Yeah, if you got caught on the wrong side of that, yeah, it's going to hurt. But gold, over long periods of time, I think is just, absorb what's going on now, go sideways, and then take the next leg up, because I don't see a resolution to broken fiscal policy, broken monetary policy in this country. And they're going to keep pumping, and they're going to keep spending. They're going to keep printing. And this is your hedge. I mean, a lot of people don't like Peter Schiff when he says gold, gold, gold. Well, he's been saying gold, gold, gold for 10 years, 15 years, as far as I remember, on CNBC and everywhere else. I mean, as being right. So to me, you got to protect yourself, and this is one way to do so, because it's really a shame that people are just stuck in a couple of different stocks that they know of or they talk about, but nobody talks about this. And I'm like, why not? Right? Diversify a little bit, get in there. And so let's see, any questions? No other questions. Okay, so let's talk a little bit about crypto, right? So I actually DCA'd more this morning, same dollar amount every Monday. I have no affiliation with River, but I use River to DCA and then take the Bitcoin out, put it in my hard wallet. I DCA dollar cost average the same amount. I bought my first Bitcoin investment I made in 2020. I didn't touch it for 4 years. So my cost basis is a lot lower than what it is today. But now I'm actually averaging up. I dollar cost average every Monday last year, and I'm going to do that this year. I do not trade crypto. I do not leverage it. I don't want to do any of that. I trade the surrogates, which you guys probably are aware of, such as MSTR, MSTU, BMNR, BMNU, SBET, and all these other names. We'll talk a little bit about those, but let's talk about crypto. What has crypto done? Crypto is in a bear market. A lot of people just go, oh, it's going to be 1.1 million. Like, bro, it's 60,000, 68,000. I can say that too. I go make some outlandish comment and say, Bitcoin is going to be 10 million. Like, why? I don't know. It's 68,000. Nobody knows what's going to happen to Bitcoin. A lot of people on X were like, oh, Bitcoin is doing this. I'm like, it's got cut in half. It's in a bear market. But I'm going to keep DCAing because I do believe in debasing of the US dollar is going to end up in a much lower US dollar. Is it an inflation hedge? No. Is it digital gold? I don't think it is, but let's say it is. And is it a inflation fighter, Bitcoin? Because there's a finite amount of it. Because we can make all the gold, right? We can dig out all the gold out of the ground, but we cannot make more Bitcoin. My thought was like, it was simplistic. In simplistic terms, it was that this is something that's finite. They cannot make more of it. But then why is it selling off? The whole world is buying Bitcoin, by the way. Michael Saylor is buying Bitcoin. All the institutions are buying Bitcoin, and it's still going down. Who's selling it? When is that going to be all absorbed? Are they all the old timers selling it and they own it at $1 per Bitcoin? Potentially. I don't know. The technicalities for me are not important when it comes to Bitcoin. I still think it hasn't been cracked. It hasn't been hacked. We'll talk about Michael Saylor and Tom Lee in a minute. And I'm a believer in Bitcoin. That's why I put a little bit of money every Monday, automatically, dollar cost average. And one day I'll just hand that cold wallet to my kids. I go, here's your part of your inheritance. Enjoy it. It could be $1 million per Bitcoin, or it could be nothing. I don't know. But that's one way of protecting yourself. Another way, obviously, is gold. Another way is stocks. Another way is real estate. I mean, there's many ways you can protect yourself against what's going on. And just being a one-trick pony doesn't sit well with me, especially at this stage of my life. Now, if you're 25 years old, you have all the time ahead of you. Do whatever you want to do, but because your peak earning years are ahead of you. Well, now my goal is to protect what I have and potentially add to it. Have some fun by trading, definitely investing in long-term stocks. But I said this before, I own 4 to be 5 in my long-term port at the moment. You guys can go watch the videos. I don't have to go through that. And I actively trade. So let's look at Bitcoin. Let's look at Ethereum. Oh, before then, a lot of people are just pointing fingers at Michael Saylor and Tom Lee. They're two human beings. They don't know anything more than you and I do. I don't think they do, right? So Michael Saylor is saying Bitcoin 10 million, whatever. Michael, it's 68,000. Buy all you can, I guess, if you think it's going to 10 million, because you seem like you keep buying at an all-time high every time. And same thing with Tom Lee. A lot of people are pissed off at Tom Lee. Why? Why are you guys pissed off at Tom Lee? Tom Lee's not doing anything he said he wasn't going to do. He runs a DAT, digital asset treasury company, that just buys Ethereum. All he does is sell shares and buys Ethereum. He said, yeah, Ethereum 20,000. Where is it? Oh, Tom, we're at 1,900. Right? And I actually said, I was on a popular YouTuber's channel a few months ago. It was like 35, 3,800. Everybody was pumping BMNR up at $60 a share. Now we're down to 18. And everybody's like, oh, Tom Lee screwed us. I'm like, Tom Lee didn't screw you. You screwed you because you didn't do your due diligence. You didn't think that there is a chance that Ethereum can go cut in half, which it did. And I said that on that, and it's public info. You guys can go check it on YouTube. I said, but what if Ethereum goes to 2,000? Sure enough, we hit 1,800 last week. And sure enough, Bitcoin hit 60,000 last week. Buyer beware. These things go sideways once in a while, but don't go blaming other people. Take responsibility. Don't play the victim. You know what I'm saying? And okay, user. Oh, okay. Well, I don't know what that means, but I was about to put you in YouTube jail, but I'm going to save you for now. But don't go crazy. So let's take a look. Let's take a look at what's going on with Bitcoin. This is the fourth section of the. So we went indexes, we went interest rates, we went precious metals, and now we're going crypto. Let's say this. Jeremiah James says, does it make sense to buy altcoin? Absolutely not. Absolutely not. You can do whatever you want. I wouldn't touch altcoins with your money. I don't even buy Ethereum. I bought some, BMNU and trading options on it and things like that, but I don't even have that in my long-term port. No. But I do dollar cost average Bitcoin every Monday. Same dollar amount. That's why it's called dollar cost averaging. So I'm actually averaging up now, but it's fine. I think I paid as high as 110. I think today I paid 68 and change. So whatever. Same dollar amount. Altcoins, well, we know what happened to altcoins, right? The shit coins, they go to where they deserve. They're not worth the paper they're printed on. Maybe I don't know much about them. Maybe it's because a lot of people have XRP and this and that. I'm like, I have no idea what they are. I really don't care. I don't want to waste $1, one day's worth of time on any of that stuff. For your sake, yeah. Well, you're in the hope and pray stage at the moment. We'll see. It doesn't look that good, my man. So let's take a look at Ethereum and Bitcoin. All right. So I'm going to go IBIT. IBIT is the iShares Bitcoin largest, ETF. Now, if you look at that, 72 high, that's when Bitcoin was 127, and now we're down to 35. That's 50%, right? Okay. And consequently, Bitcoin down 50%. Michael Saylor's MSTR, which is the largest DAT, is from 457 to about 100, 130. So why is that? Why is Bitcoin down 50% from all-time high at 127 to 68, which is less than 50%, about 45%, and MSTR is down from 457 down to, it almost hit 100. 104 was low. Now it's about 133. So 457 to 133 is $320. That's 70%. Why? Oh, I've done a lot of videos on MNAV, multiple net asset value. Please go check those out. Because again, people don't understand, because I see all these fools on X. So MSTR, I'm like, bro, what are you talking about? I mean, what is wrong with you? And then I hope one of those grabs the link and comes on. We can have a debate about this thing. But they don't understand MNAV. They just talk shit and X. And I go, keep buying. I'm like, yeah, keep buying. Get closer to the, closer to blowing your account. No problem. And then people go, then all these people just look at long term. They go, oh, in 10 years. I'm like, bro, in 10 years, the world may not be here. What are you talking about? Price is the price today. That's all I'm dealing with. So that's IBIT. And it's in a downtrend. It's in a bear market. It's horrible. If this was a regular chart, I'd be like, I wouldn't touch that with your money. This looks worse than PayPal, for God's sakes. I mean, I'm like, what is there to say? Is it bottoming? I have no idea. It's not. There's no indication. Back here, last maybe one sideways 2 months, and when that got taken out, I'm like, watch out below. And that's 1 year. Okay, let's take a look at longer pictures. This is 3 year. So basically, Bitcoin is back to where it was right here in all this wide range when it went sideways from March of 2023 all the way to 2024. And I was like, all the way to December, November. So that's like 8 months of sideways. And then it broke out, and then it went sideways some more, and then it went higher. Well, now we're back to where we were. We can look at a longer term picture. I don't think this has that much of a history, but yeah, okay. So this goes back to February of 2024. That's when IBIT was established, which is the iShares Bitcoin ETF. Well, that picture tells me this is in a bear market. Until things change, hope and pray is going to not work. And for a market like this that's just kind of cascading lower, it needs to digest and it needs to start going sideways and create a base. Now, Bitcoin is a little wilder than regular stocks, but we'll see. We'll see how it goes. And here's Ethereum. Here's the Ethereum iShares Ethereum ETF. And it's in a bear market. It went from 36, which is 4,700 on Ethereum, down to 15. It's down 60%. I'm like, what is there so hard to understand here? Could it go to like maybe 12, 1,500 on Ethereum? Potentially. It was there before. And where will all the bag holders in BMNR will be? They're going to keep cussing Tom Lee for a while. And Ethereum is actually, this is 3 years. Ethereum is approaching. This is max. So let's look at 3 years. So Ethereum is back to where it was literally in March of last year. Right? Okay. And then consequently, what happened to BMNR? The largest DAT, digital asset treasury company, which 99% of the people have losses on holding DAGs. What happened to BMNR? Okay. So BMNR went from 68 to 16. That's 70+%. And if you guys notice, Ethereum did not go down 75% or 72%. Well, how much did it go down? It did go down quite a bit. It went about 60%. So why? Again, MNAV is getting crushed, or MNAV is shrinking. And then people don't understand it. They just keep saying BMNR, BMNR, BMNR. I'm like, look, folks, BMNR is not going anywhere. MSTR is not going anywhere. SBET, another one, which actually I like more than BMNR. SBET is not going anywhere until or unless Ethereum moves appreciably higher. Period. Done. End of conversation. Now, do you believe the story of Ethereum and Bitcoin long term? Do you believe it? Meaning, do you think Michael Saylor and Tom Lee are right? Specifically, Tom Lee, who says Wall Street is going to be adapting, right, Ethereum, and everything is going to be on that network. So, right, basically that's getting rid of the middleman to a point. Everything is going to be on the network, and it's safe. Transactions are going to be. The only holdout at the moment is obviously the bill in the House and the Senate, but who knows what kind of bill is going to come out of there, right? But besides that, his outlook on this is Wall Street is going to be rebuilt on the Ethereum network. Is he right? Is he wrong? I don't know. It's just one man's opinion. I'm just going to go what the price presents itself to me. If the price presents itself an opportunity, then I'll just do it. But I don't know if Tom Lee knows either. Now, you can say, I know. Come on and explain it to me. I'm always open-minded and willing to learn. Everything's going to be built. What do you know that I don't know? What do you know that the market is discounting and pushing Ethereum from 4,700 to 1,900? What do you know? The market's telling you it's none of that is happening, because markets are always forward-looking, right? Markets are always forward-looking. What do you know that the markets don't know? I don't think you know anything. When I say you, all the people who are claiming that this is what's going to happen, that's what's going to happen. They're just talking out of their butt. The price says no. Today's price. How do you know today's price is low, or how do you know today's price is high? Well, I just can only deal with today's price. Now, I can have an opinion about it, but that opinion should not make me go invest in something that I don't know the future of, because these are not actual companies, BMNR or MSTR. They just depend on Bitcoin's price and Ethereum's price. You can't compare a BMNR to an Apple or a Google or a Meta or a Microsoft or a Southwest Airlines or Walmart or whatever, right? Because those companies produce free cash flow, those companies produce earnings, those companies they have productivity. These companies don't have anything other than Bitcoin or Ethereum in their treasuries. So, to me, yeah, buyer beware. Don't go put all your eggs in this Tom Lee basket, because then it's just going to be you're going to the poorhouse real quick. So anyway, all right. So we're done with those 4 segments. So what I'm going to go through questions, and then I'll go back, and again, anybody wants to join the link. Where was the link? Okay, let me put the link up again. If anybody wants to join, you're more than welcome to do so, because I'm here for a while. Although I started late due to some technical difficulties on StreamYard. Maybe you guys know a better platform than StreamYard to go live. All right, here is the link. If you guys want to join, anybody, especially on X, some of these X-Furus on X, if you guys want to come on and talk about your Palantirs and hoods and SoFis and whatever, or how you sell puts and calls and make money, you never lose money, I would love to have you on. Okay, BTC recover. Okay, copy. Okay, well, thanks. Okay, cool. How does one know if BTC and ETH have bottomed? They're going to have to go sideways. Yeah, it did. Exactly. That's why you just do technical research, I guess. When that broke, the waterfall is broken. Like, well, the dam is broken. Now you're going to the next leg. So it's going to do the same thing. And maybe it's the bottom. If not, they'll take another leg down, or that'll be the bottom, and then we'll start going up. So let price dictate for you. I can't guess. A lot of people are much smarter than me. They guess. They go, oh, this is what's going to happen. I'm like, how do you know? I don't know. That's what's going to happen. That's why a part of me looks at charts and tries to figure out a bottom for something, support, resistance, all that stuff. Again, I call it chopsticks. Look, it has its place. It kind of, kind of works, but nobody knows, man. Tom Lee doesn't know. Tom Lee lost a lot of credibility in this crowd now, because he goes like, oh, Ethereum is going to be 20,000. When did you say that? By first quarter of 2026, or 8,000, or some ridiculous number. And you have to ask this question to yourselves. I know they're doing in OTC markets. They're not doing open markets. If they did all their buying on open markets, Ethereum will go to 10,000. But they're doing it in over-the-counter markets. And that's why, a lot of people don't understand, like, all this buying is happening. Why aren't they going up? It's not because they're doing it in OTC desks. They're not doing it. They're not going to Coinbase and buying open market. Because if they put the buy algo in Coinbase, that thing, Bitcoin will move $10,000 up every day until Michael Saylor is done buying his Bitcoin, or Tom Lee's done buying his Ethereum. So, right? That's why they're doing it that way. But again, price is going lower. That means there's a seller at that price. Tom Lee is buying the world, Every day he wants to get to 5% of Ethereum. Somebody sell it to him. And then I certainly believe that all these other products that has come on Bitcoin and Ethereum have killed these markets. What are they? Futures, options, right? Leverage products. You know, without that, I think Bitcoin was doing better on its own without all those products. But now that all these products are out there, you can manipulate the price really, really well. What keeps you believing in the price action upside? Nothing. I'm not believing in any of it. I'm just trading what I see. It's in a bear market. I said that like for months now. I don't believe on the upside. It's going lower. Long term, I'm believing in the finite well, Bitcoin being finite. That's why I'm not buying Ethereum either. I'm dollar cost averaging Bitcoin. I'm believe long term. My only opinion is printing and spending is going to continue, and assets are going to be higher, hard assets. So gold, silver, real estate, Bitcoin are going to be higher at some point, right? Who outperforms who when, I don't know. That's the only thought process I have. No, it's not that big of a market. Oh, you're saying that a lot of people won't move to gold. Okay, then when gold sold off, why did Bitcoin sell off again? When gold sold off hard, $1,000, it literally sold off $1,000. Why didn't Bitcoin go up? Bitcoin sold off with it. I'm not buying any of that stuff. That correlation is dead. There's also a lot of correlations that got blown out of the water, right? And there's a correlation between M2 and Bitcoin with a lag of about 6 weeks. That's not working anymore. There's a ratio between Bitcoin and gold. That's not working anymore. All these things are meant to be, broken, I guess. Like records are meant to be broken. So who else wants to come on? Anybody wants to come on? Nobody wants to come on? Okay. So let's talk a little bit about individual stocks. Individual stocks have been in their own world of hurt for a while. And so if you own a stock that's down 50%, there are many big names, especially legacy software companies, and many big names on X. Some are more, like HIMS, down, 75%, with the market only down 2% from its all-time high, with the index, and triple Q down about 3%, 4%. Question is, what is going to happen to that stock that's already down 50% if the index sells off here? What's going to happen? We get a general market garden variety sell off 10%. What's going to happen to Hood? Is it going to go counter trend? Is it going to rally? No, it's going to get cut in half again. What's going to happen to HIMS? What's going to happen to Oracle? What's going to happen to Adobe? What's going to happen to Palantir? What's going to happen to NVIDIA? What's going to happen to all these stocks? NVIDIA is not down. I'm talking about the ones that are already down 40, 50%. What's going to happen to all the power generators for the AI world, AI data centers? What's going to happen to these stocks? What's going to happen to quantum computing stocks that were just hot commodity for a while? What's going to happen? You think they're going to go up while the general market is down? First of all, most stocks do follow general market conditions. In order for you to find the outperformance, you have to do some work. You have to create some scanners. You have to figure out what's outperforming, what's rotation, what stocks are institutions, or what groups institutions are rotating into. It's pretty easy to do. But I mean, I can give you everything, but I've been doing it. That's why I stay away from all this fluff. They're like, all they know is Robinhood. All they know is Palantir. I'm like, bro, there's 10,000 stocks out there, and 5,000 are big companies, billion-dollar market cap companies that you can trade. Why do I need to be stuck in PayPal or, I don't know, all these or all these other names that people just constantly talk about? Why do I need to be stuck in HIMS? There's wonderful companies, or why do I have to be stuck in NVO, right? Look at Glaxo, look at Merck, and look at all these other pharmaceutical companies. Why do I have to follow HIMS? Just because some goofball on X said it? What does he know? He doesn't know shit. He doesn't know anything more than you do. So my thing is like, no, I'll just follow my thing as opposed to following their thing, because they're just going to go to the poorhouse. Well, I mean, down 60, 70%. Again, it's not my wish for a bear market, but I think once we get a good one, I think all these folks are just going to go, that's the other side of the coin, because they have not experienced a bear market. But that includes all the major influencers on X who have hundreds of thousands of followers. Hopefully, hopefully it's going to go well for them on the next bear market. Okay, so I answer this question and go to do my little chopstick analysis on these hot stocks, supposedly. So people are holding BM&R are literally just praying for more people to buy ETH because there's no, I guess, or they believe Tom Lee. Right? They're dumb enough to believe Tom Lee. Yeah, they're praying for ETH to go up. Forget more people buying, because all the people buying for ETH is going lower, right? Is the trend up or down? Trend is down. Okay, especially last 6 months, 5 months. People are buying ETH, I guess, right? For every buyer, there's a seller. We know that. Why isn't ETH going up? Supply demand, right? More buyers than sellers. At the moment, there's more sellers than buyers. That's why the price is going down. Tomatoes and potatoes. Stocks are not that difficult, man. People make a lot of like this supply and demand. There's a lot of supply. It's going down. Price is going to go down in everything. And when I say that, because people know I'm into this, and people ask me in private circles, they go like, why is the stock go up? I'm like, supply and demand, more buyers than sellers. And they go like, come on, man, it's more than that. I'm like, no, it's really not. Now, you can go into the reasons for more buying. That's a different story. But at the moment, everything is supply and demand. More sellers than buyers. What happens? Price gets adjusted lower. More buyers than sellers. Price gets adjusted higher. Just look at it as simply as that. I wouldn't go any further than that, because once you get into the rabbit hole of why this is happening, should this, what, I'm like, you're going to waste a lot of time. Aren't we already in a bear market in tech and Bitcoin? It's not all tech. Some tech is doing wonderfully well. Software is definitely in a bear market. Bitcoin, absolutely. For sure. And you're going to say now, why are you buying Bitcoin? I'm just buying, I told you, there's scarcity value, and I'm never going to trade it. I'm going to hold it. I'm willing to take a chance for it, and I'm not buying to the point that it's going to affect my lifestyle or anything like that. Some of these people on X or whatever, social media, they put all their eggs in that basket. I'm like, no, I'll just buy very small pieces every Monday. And if it does work out next 10 years, and if it's $1 million a piece, like Michael Saylor says, I'll just hand a few $1 million to my kids. I go like, here it is. Enjoy. You know what I mean? That's the goal. That's the thought process. Nothing more, nothing less. I don't take things too seriously. So let's go back to the hot stocks. Let's go back to hot stocks of the day. Good morning, John. Good morning, Mr. John. You're welcome, sir. All right, so let's look at the hot stocks of the day. What are the hot stocks? Should we go through X and figure out the hot stocks? No, we already know what they are. They're in love with 10 stocks. I can't even come up with 10, actually. They're all in downtrends. They're all bleeding. And hopefully the bleeding stops. But if we do sell off here, these stocks are going to go a lot lower. So let's take a look. So we talked about indexes. We talked about interest rates. We talked about precious metals. We talked about crypto. And you put your questions up if you do have questions. Now we're going to talk about the hot stocks on X. I call it that section. What's the number one stock? Well, let's start with Palantir, because that's been the soap opera going on between Amit's Investing and Michael Berry. All right. So this is 1 year, 1 day of Palantir. Palantir is back to where it was last May, basically. It's down from 200 to 130, down 70 points, which is 35%. Should we just look at that, though? Should we say Palantir is going to 50? No. Is Palantir in a short-term downtrend? Yes. Is Palantir in an intermediate-term downtrend? No. It's in an intermediate-term uptrend. And is Palantir in a long-term downtrend or an uptrend? Palantir is in a long-term uptrend. The first thing all of you folks need to understand is the trend is your friend. Short-term trend is not your friend. Here's 3 years on Palantir. Wonderful uptrend. And here's 10 years on Palantir. Palantir had these growing pains before. Palantir, when it went public first, it went from like 11 to 45, then sold off all the way down to 6. And that took a couple of years, by the way. And then it came out of the dead, and it's doing what it's doing now. So in the medium long-term, Palantir is in an uptrend. So I think 120 probably-ish is where I may take a crack at Palantir by selling some put credit spreads probably. But again, I'd rather deal with uptrends, short-term, intermediate, short-term especially, because most of my trading is not short-term. And most everybody's trading on X because they sell puts and do this and do that. I'm like, yeah, it's short-term trading. But, all these folks then become from short-term traders to long-term investor. So Palantir is in a short-term downtrend. Does Michael Saylor know that the Palantir is going to 50? Because he bought 50 puts, I think, going out to like 2027, I think. I don't really pay too much attention, but I think I saw it somewhere that he bought some puts. He's not short the stock itself. FYI, if the markets are going to sell off, folks, educate yourself on how to short stocks, what kind of strategies you can put on, because just buying puts is not going to protect you. You need to, if you're a premium seller, you need to learn how to sell calls. You need to learn how to sell call credit spreads. You need to learn how to buy put debit spreads. You need to do all kinds of stuff, or short the underlying. So Palantir is down 30. What did we say? 30%. 200 to 130, so 70 points. That's 35%. Is it still in a long-term uptrend? Yeah. Could it go down to like 75, still being an uptrend? Yeah. I could get cut in half again and they'll still be in a long-term uptrend. Intermediate will turn lower at that time as well. But I think on this move down, we're getting pretty close to a bottom, probably about 120 range, 120, 125 range. And then, nothing goes down straight, right? And then we'll have a rally, and then next leg will come over. Ultimately, Palantir could go to 65. Yeah, of course. Do the fundamentals support Palantir at 130? No. Did the fundamentals support at 200? Absolutely no. But then the market's the market. The price is the price. I could have shorted Palantir all I wanted at like between 180, thinking it's high. When they went to 210, I would have gotten blown away. So my thing is like, trend is your friend. Don't argue with the price. The price is the price. So Palantir, Amit doesn't know shit. Michael Berry doesn't know shit. The price is the price. They're both in opposite corners, blue corner, red corner. There's good soap opera going on. Look, man, everybody has an opinion. We'll figure that out. Well, hopefully Palantir's earnings will catch up. What will happen if the Democrats come to the White House? Do you think they're going to get government contracts? No. Is that the market signaling? Is Palantir actually signaling that the midterms are going to be lost by the Republicans? Is that what it's signaling? Start thinking a little deeper, folks. Don't worry about the soap opera that's going on X. All right, so that's Palantir. Let's take a look at another favorite, SoFi. Everybody talks about it because that's what I see the most. SoFi, Hood, HIMS, Palantir. I don't know. Is there any of the stocks that they could talk about? I don't think they're talking about it. Obviously, Bitcoin and shit like that. Do they talk about anything else? Not really. My feed anyway. So here's SoFi. Again, chopstick reading. Okay. Actually, this short SoFi made some money before it took off, went to 33. All right, so let's take a look at SoFi. SoFi is under his 200. Same thing with Palantir, by the way. All these stocks that all these pumpers are pumping, technically, I wouldn't look at twice on a stock that's under his 200 EMA because that's pretty key for me. And Palantir is. So is SoFi. So is Hood. They're all under their 200 EMA. So, and they're technically that's breaking down. So my goal is to make you guys understand there is some point to technical analysis, especially moving averages. Anyway, so that's Palantir. Here's SoFi. Okay, so SoFi was 33 about a couple of months ago. Now we're down to 20. All right, so that's down about 40+% from all-time high. But again, don't forget last April, SoFi was $8.60. So it's still a double plus since last April. That's amazing. Now, go tell that to the guy that sold puts at 30 and got a sign. Go tell that to the guy that sold puts at 25 that got a sign. Or whatever, right? My point is, somebody bought that thing at 33. Somebody bought that thing at 23. Somebody, okay. Again, people are going to say, oh, it's unrealized. Well, that unrealized could get a lot larger unrealized losses. Technically, the stock is in a downtrend, short term. Again, intermediate term and long term, is it in a downtrend? Well, here's intermediate. No, intermediate, it's in an uptrend. Obviously, if intermediate is in an uptrend, long term is also in an uptrend. But is SoFi going through one of these pains right here? Except that there is a difference. This was last April when SoFi sold off from about 19 all the way down to 8. That was last April. That's when the market sold off 25%. Literally. Okay, the index sold off 25%. And SoFi sold off 60%, which is normal because it's a higher beta stock. Now the index is only down 2% from its high, the SPX, and this stock has sold off 45%. That's the point I'm trying to make with all these folks on X, that what's going to happen to SoFi if the index sells off 20% or 10%? What's going to happen to Palantir, right? Because last time Palantir sold off from 125 down to 64, which is 50%. It was during April, during the crash, right? Now, Palantir is down 35% from all-time high, from 200, 207. It's down to 40%, with the market only down 2%. So what's going to happen to Palantir if the market sells off, right? Same thing is, we can talk about Hood. Hood is down. This is 3-year Hood, right? Still intermediate kind of uptrend, long-term obviously uptrend. What's going to happen to Hood from 154 down to 75, down 50% if the market sells off 10%? Because last time it had a 50% sell-off, it was during a market crash when in April when stocks got cut in half, most of them. So Hood at that time went from 65 down to 30. That's about 55%. Well, we're already down 55%, close to 60% without the market selling off. So what is this saying? What is this? What are all these stocks that people follow are saying? Well, they're in a bear market on their own, and I can show you a million of them. And here is him, is the fourth favorite. Okay? And people are still saying HIMS is great. I'm like, I wouldn't buy this with your money. HIMS sold off from 65 to 16. That's down 75% with the market just down 2%. So unless you know something that I don't know, that you know something's going to happen, or FDA is going to stop their investigation, and they're a viable company, whatever it is, right? That's the point. I'm like, why am I supposed to look at these things? Because cheap gets cheaper. Here's PayPal. A lot of people talk about PayPal. I mean, PayPal got cut in half, more than in half. PayPal has been in its own bear market for the last 4 years. 5 years, I think. Here's PayPal. PayPal topped at 310. It's down to 40, and people go, it's cheap. Is it? Could it go to 30? Could it go to 25? I think it could. And then at that time, you're just holding the bag and opportunity cost. Could it go to 30? Another 30%? It could. Why am I dealing with it anyway, though? Right? I don't want to deal with these things. All I want to deal with is there are other opportunities, other companies, thousands of them out there with growing earnings, growing revenue, growing top line, growing bottom line. Why do I need to be stuck in one stock, 2 stocks, 5 stocks? I don't want to, and I'm not going to. But so the Palantir story, yeah, okay. Do I trade it? If it gets to 120, do I give it a crack? Probably. Some put credit spread, but define downside. Same thing with Hood. I think Hood will bottom somewhere around 65. Somewhere in that range. I mean, technically speaking, anyway. So this is Hood. So that's the old high at 68. So we're getting pretty close to that. Same thing on Palantir. So, Palantir, yeah, about 120, somewhere around here. This all high. That all high was resistance, now support. Technical jargon, chopsticks. Here's SoFi. Where would I give a SoFi a chance? Yeah, about here. The all high, 18, 19. We're getting there. I mean, all these stocks are getting to a reasonable level that I could take a look at as a trade with defined risk downside stuff. HIM's definitely not. PayPal, maybe. I don't know. Maybe. But then there's so many other stocks that are doing wonderfully well, right? You guys may think like, yeah, but what if those start going down? Well, look, if the market's going to take a dump of 10%, 20%, everything is going to go down. But then, believe it or not, even in the worst markets, there are stocks that do go up, right? I mean, I have a list that I can put up, and those charts look completely different than some of these fool stocks that just keep looking at it. And I'm going like, you guys do realize there's other stocks on the planet, right? There are companies that are always, in trend and making money. And I'm like, for example, simple companies, right? That we all heard of, Alcoa. Why wouldn't I be trading Alcoa this as opposed to go trade HIMS or PayPal or Hood? Why not? This institutional. I mean, look at this. I rather trade this. I rather sell puts on this. I rather the so-called wheelers. Why don't you guys wheel this thing? Because if you want to wheel a downtrending stock, all you're going to do is just hold a bag, and your unrealized losses are going to keep growing. Just trade something that's going up, right? And I'm like, I don't. Somebody explain that to me. Somebody on the X world explain it to me. Arshel Daniels Midland. There you go. Why wouldn't I do this? Right? I mean, there's many. There's 168 stocks on my watch list at the moment, right? And I'm going like, some silver stocks. I'm going to Freeport McMoran, another copper stock. Look at that. Why wouldn't I do that? Why would I go and look at the other garbage? Is Hood garbage? No. Do I love the company? Yes. Do I have a small trading account at Hood? Yeah. I mean, I trade at TOS, but why not this? Right? Why do I deal with this and try to guess a bottom while I have this? Why? Right? That's my question to all of you who are watching this now or later. I mean, I gave the examples. What are the stocks that are going up? Walmart, J&J, Coca-Cola, believe it or not. Southwest Airlines. Why would I not deal with these? Isn't the point making money? Is the point of making money buying something at 20, riding it to 150, riding it down to 50, back to 150? Is that the point? Whoever told you that, they need to wake the fuck up. Excuse the language. I mean, there's so many stocks, right? And I'm like, there's so many that are in their growth phases, and the stocks are making all-time highs, and price don't lie, right? It's just why do I have to deal with the same 5 stocks that people are just fascinated with? There's Carnival Cruise. I mean, there's like so many stocks. Okay, high tech, right? Okay, let's talk a little bit about high tech. Let's talk about high tech. Let's talk about high tech. You know, what's been in the world of hurt? Adobe. Look at that thing. Why would I even look at that? When will it buy? Is it cheap at 250? I don't know. Has it been in a bear market of its own? Yeah, I guess 638 down to 260. Is it cheap? I don't know. I don't want to even look at it. When it's going up, you let me know. Buy high, sell higher, folks. Here's 10-year Adobe. You know, Adobe was like 50, 80. It's still 260. Who's to say you cannot go there? Okay, say another one, CRM, right? Salesforce. In a bear market. ServiceNow. I can put like a million of these. Look at these things. They're down 60, 70%. CRM, ServiceNow was 240. Now it's 100. Duolingo. 544 down to 112. Now people go, well, it's cheap. It's down 80%. Really? You couldn't go to 60? You can go to 50? Again, why do I need to endure this pain, potentially, for it to go back to 500? At some point, I'll catch it on its way to 500. But not, I can't catch a falling knife and be successful at what I'm doing. I just can't. And I don't want to. Too old for that misery. Too old for that. So, you know, there are stocks in their own bear markets. You know, perfect example of that would be comparison between two identical companies, right? FedEx. Here's FedEx. In fact, let's look at over 3 years. Here's FedEx. You guys see this, right? New all-time high on FedEx. Okay. And here's UPS. Same business. Drastically different looking things, right? I'm long UPS at 96, full transparency. So you guys know. I bought it finally here the day they announced the massive layoffs and earnings were kind of looking like they're turning around. The stock is 119. Great. Okay, cool. But would I rather have owned over the last 3 years FedEx or UPS? Which one? Obviously FedEx, right? Would I rather be owning Walmart over the last 3 years versus Target? Same business now. I picture's worth 1,000 words, right there. I rather own Walmart over the last 3 years. So the point I'm trying to make is, the trend is your friend. Don't get stuck with these things that keep going lower and lower, saying, okay, it's cheap here now. Nothing is cheap. Market will decide for you. You are not smarter than the market. So let the market decide for you. Price takes precedence. There's a million other ones. So many stocks that are doing the right things fundamentally, technically, every which way. But then people just get stuck. They just go, nope, Hood is the one. I'm like, why? Why Hood is the one? You know, healthcare sector, right? Okay, you guys are looking at HIMSS and NVO, right? Novo Nordisk, right? Okay, that's 3 years. 148 down to 50. Is it cheap here? I have no idea. I don't want to look at it. Well, we looked at HIMSS, right? Disaster. Okay. Well, let's take a look at let's take a look at Merck. Right? Yeah, I'd rather own Merck than NVO. Pharmaceutical, right? Healthcare, right? Okay. Cardinal Health. Pretty good. Right? Well, pretty good. Amazing, right? Oh, United Health. Which one would you rather own? So even in the same group, you have to be selective. When shit's going down, you don't know when it's going to stop. Just buy it when it just straightens it up a little bit. Or Molina Healthcare. MOH, I think, is the one. Yeah. Well, that disaster. 423 high, it's about 113. So my point in all of this is buyer beware, understand what you're doing, and just study. And don't get caught up in the bullshit that goes on in social media. Don't get caught up in some influencer because he likes or she likes hood or whatever it is. They don't know. They don't know any more than you do. Do a little bit of a research, do your own due diligence, and then you'll be just fine. Or listen to reason, man. I'm trying to be the reason. I really am. I'm not telling you I'm this or that. All I'm saying is I have seen all these movies before, and you will lose every dime you own if you follow these knuckleheads. So with that said, I'm going to go to the front. I think I yacked enough today. I'm going to answer some last questions, and then nobody wants to come on. See, this is the problem. Oh, now it says X is experiencing issues with live streaming posts. If you can't find your live X, you can manually post it by following our guide. Oh, okay. So now I know what's going on. Because usually I have about over 100 people watching. Now you tell me. Now you tell me. Last two questions. What happens if Bitcoin ETF, ETH, if the index sells off? I don't see the correlation too much, but it goes risk on, risk off. All risk assets go on and off together, right? Seems like every risk asset sells off fast, and then when they're doing that, but that's just what they do. They just rotate into utilities, and they buy all these consumer cyclicals and things like that. So you can see the rotation if you have some sort of mechanism to figure all this thing out. Most people don't. Most people are like, nope, I only know that one. I'm like, okay, God bless. Be careful with high yields, sir, ma'am, sir, I think. There's a reason for it to be high yield. You could have been HOW. You know about that one? Yeah, high yields are not indicator of anything other than trouble. If it's too good to be true, it's usually true. In fact, let's look at those. EAD and JEPI. I have no idea what they are. Let's take a look at it. And then we'll go have a cup of coffee. I got nothing else to do. I'm kind of bored. EAD. Why am I betting that it's some sort of disaster? Allspring Income CF. Oh, no. I don't even know what it is. What is it? Allspring Income Opportunity CF. What is it an ETF for? If it's above average yield or dividend, there's a reason for it. And you just study it, make sure, buyer beware, make sure you understand what the heck you're buying. Go look at what their portfolio is. There's a reason for it to be super high yield. And what was the other one? JEPI. What the heck is JEPI? I don't know. Let's take a look. JP Morgan. Yeah, okay, fine. Yeah. Is this like is it a structured product? Do they sell cover calls? Is that what they do on JP Morgan? I'm not sure. Buyer beware. There's a reason for the yields to be that high. Seems like this moves with JP Morgan, actually. In fact, let's look at JP Morgan stock. Yeah, JP Morgan, I probably could look at it short term. JP Morgan, yeah. Structured products don't do well if the underlying is eroding all the time. But again, if it's your thing, if you're looking for income, sure. I wouldn't. Again, none of this is trading, financial investment advice, folks. So you guys know. I do my thing, you do your thing. Yeah. Wells Fargo. Oh, the first one is Wells Fargo? Okay. Yeah, they have millions of structured products out there. They usually don't do well, but if you like high income, one way to look at it. Yeah. Yeah. So my thing is trade. 9%. Yeah, it's high, but you're taking the risk for it. I mean, right? Yeah, I'd be careful with that, especially below investment grade debt securities. Yeah, I'd be careful with that. There's a lot of greed going on there. There's a lot of debt sloshing around the world. I don't know what debt is good, what debt is bad. If I were to buy any debt, I'd just go buy municipal bonds because I'm in California, right? At least tax-free. But that's my thing. I try not to look at too many high-yielding investments, just because I can produce good enough of a yield by myself. So, but for people who don't have the time, you have a job, you don't. Yeah, by all means, if you understand what's in it, make sure you understand what's in it. If you understand what's in it, it's pretty easy to do. Just go to their website and figure out what they're holding, and figure out the risk. There's risk in everything, but 9% seems pretty good. And I mean, when the 10-year note is like 4%, 9% double plus. I don't know. I don't know what's in it. I wouldn't do it. I mean, not for me. For you, it could be perfect. Like Doug said before, one of my members. By the way, if you're interested in becoming a member, click join, send me an email, Sergio at sergioavadian.com. I'll send you the chat group link where I post my trades, my equity, and I do a live stream for them, although that's about to change, I think. Breaking news for the members. We may have to migrate to some other platform soon. And yeah, so I thought this was good. Nobody joined, unfortunately. But I'll keep putting the link up for some of these ex-furus to show up one of these days, because I really would like them to educate me about what they're doing, what their point is. And yeah, so hopefully markets behave, and hope you guys enjoyed it. I'll see you guys on Wednesday, Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Make sure you put a like if you did like it. Make sure you share. Now I know Livestream on X is experiencing issues with live streaming posts. I figured that out a couple of days ago. If you can find out Lex, you can manually post it. I don't want to manually post anything. All I want to do is go live, and I go live on all the platforms at the same time. I'm sure they'll fix it. So may all your longs skyrocket and may all your shorts tank. Don't listen to anyone. Educate yourself properly, including me. Educate yourself properly, because what works for me may not work for you, may not work for anyone else. Our risk tolerances are different. Our account sizes are different. Everything is different. There is no one size fits all. There's many ways to skin a cat. If you do come my way, though, you will definitely learn. If nothing else, you will learn. I will give you all the tools for you to handle a bear market, a bull market, sideways market, trading, derivatives, options, whatever it is. So all I'm doing is passing along my 30 plus years of experience. And pretty soon you'll figure out what works for what, and what works more importantly for you. Who are you? Are you a day trader? Are you a swing trader? Are you an options trader? Are you a premium seller? Are you a, zero DTE trader? Whatever you are, you'll figure it out. Then you'll pay the tuition to Wall Street for a few years, and then you'll figure it out. Or you can listen to people who know what they're doing, and they're not after clicks. I'm certainly not after clicks or subs. I'm just doing it because I have free time and I like informing and educating. And then share it you know. But please educate yourself. Education is power. So thumbs up. See you guys on Wednesday, 10 a.m. Pacific, 1 p.m. Eastern, and every Friday, Power Hour with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. I will see you guys tomorrow, my members in the chat group tomorrow, and most of you, hopefully, on Wednesday at the same channel.